If we take a look at the last 15 presidents in the United States, some have been Democrat, some have been Republican. The stock market has gone up under Democratic presidents. It's also fallen under Democratic presidents. The stock market has gone up under Republican presidents. It's also fallen under Republican presidents. So, what does that mean? Well, if you were just investing for the long term, who cares? But for some investors that we'll call it a little bit more sophisticated, you might want to understand what the president is going to do in terms of shifting government spending. Now, I'm going to make this a little bit technical, but let me kind of break this down. Our economy is measured through a number called GDP. And GDP is a measure of all spending that happens in our economy. In the United States, the largest spender is the government. 30% of our GDP, our economy, is government spending, which means that there are certain entities, certain businesses that will benefit depending on where the government spends money. And that can then impact those stocks, it can impact those industries, and it can impact those businesses. So now, let's break this down. If you're a long-term investor, you're investing in the S&P 500, you're investing in just general ETFs and index funds and mutual funds, it does not matter. But if you are, let's say, a little bit more sophisticated, you want to understand how government shifts that are happening, now we can dig a little bit deeper. So prior to the election, we published a whole report in Market Briefs Pro on this, where what we talked about is, if Trump is elected president, here are the things that he has said that he's going to do. Number one, he wants to deregulate oil and gas. Number two, he wants to deregulate the financial service industry. And number three, he wants to invest in the military. So if you break this down, oil and gas, these are companies that are investing and drilling oil. And so if these companies have less regulations and more ability to produce product and sell more product, they could see bigger revenues and bigger profits. Number two, with financial service industries, things like the companies on Wall Street, if you deregulate them and give them the ability to do more things, they can make bigger revenues and bigger profits.
And crypto as well.
And crypto.
Crypto's, since the news that he's going to be inaugurated, the prices have just skyrocketed.
Exactly. And number three is investing in the military. Now, what does it mean to invest in the military? Well, if you're investing in the military, that means that we're going to be practicing shooting more guns, shooting more bullets, having artillery, having planes and other machinery. And these are then done by private companies. And so if the government can spend and choose where to spend money, and the government then decides that they want to spend more money or allow companies to be more free to do whatever they want in these industries, those industries then have the ability to potentially grow their revenues, grow their profits, grow the stock prices. These can then create what we call a government shift because the government spending shifts, and that can create an investment opportunity for investors that want to be a little bit more sophisticated. But I'm going to say this again. As a long-term investor, forget the election cycles. You're investing for the long term.
For those less sophisticated investors, as you were when you were 19 years old, you chose to invest in real estate as a cash-generating asset. Now, if I want to invest in real estate as my first investment, as you did, what are the things that I should be looking out for if I'm someone that knows nothing about real estate? What kind of properties should I be looking for? How big? Does it matter how much those properties cost? Am I looking for family rentals, studio apartments? What kind of things matter?
What you invest in is going to depend on what's best for you. But the way I like to look at it, for me, because I can't tell you what to do, is for me, when I invest in real estate, is I look for a 7% cash-on-cash return minimum.
What does that mean?
So if I invested $1 today, I want 7 cents of cash flow after expenses every year for my dollar that I invest. So if I buy, let's just call it a $100,000 house, and I'm going to keep it very simple. We're going to have no debt. I take $100,000 out of my bank account and I buy this $100,000 house that I then rent out. That rent, after all the expenses, should then put at least $7,000 into my pocket every year. That's what a 7% cash-on-cash return means. Now, for me, I prefer single-family houses or multifamily apartments because that's kind of where I got started and I've found more success there. And it's a little bit more innovation proof because we know that offices can go up and down. If companies are working from home, offices can be affected. The retail sector can be impacted if companies are moving online, and we see that there's a lot of shifts happening in the retail spaces. But at the end of the day, you got to find what's right for you and how involved you want to be. When I invest in real estate, I want it to be passive for me. That after I find a property, after we do the renovations, I want to give the keys over to a property manager. I don't want to have to worry about it.
Okay, so you don't become the landlord yourself and deal with the tenants directly?
I do not. And the reason why is I have other things that I need to do. And I don't want to spend my time managing the property. I want to spend my time acquiring. I want to spend my time investing, but I don't want to spend my time managing.
What's the best investment you ever made?
The best investment I ever made is the investment in myself. That has given me a much better return than any real estate, than any stock, and even than any cryptocurrency. And when I say best investment in myself is two things. Number one is the investment that I have made in my own education outside of school. So books, podcasts, classes, coaching. Number two, the failures. I have made a lot of mistakes. They have cost me a lot of stress, a lot of headache, a lot of money, but they have taught me a ton. So we'll talk about real estate for a second. If we go back to the first condo, the sunshine and rainbows is I rent this property up for $600 a month. But the downfall, or the risky part and the bad part, is that I made every mistake possible. Number one, I hired a bad contractor. Number two, I hired a property manager, which I didn't realize was a fake property manager. We didn't even sign a lease with the tenant. I didn't even sign a contract with the property manager. They weren't working with the tenants, and they gave the tenant my phone number. So here I am sitting in my organic chemistry class, getting calls from my tenant saying the property is going to implode because the light bulb fused. Then we brought in a bad tenant.
Can I ask you a question there then? How could you have avoided all of this?
Well, I could have either, number one, had a real estate investor that I could have talked to, which I didn't have access to. I read a lot of real estate books. So if you say, what could I have done differently?
To avoid it. Because there's people listening right now that are going, Jesus, I want to get into this real estate game, but I don't want to go through all those mistakes.
You can learn as much as you want. You're going to make mistakes. It is a part of the process. You can learn everything you want, but every real estate deal is unique. You are going to screw up. And I have made a lot of screw-ups. But once you get through the screw-ups, it becomes a lot easier. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.